Welcome back, guys, CryptoFollow channel. In this educational video, I want to talk about EqHigh highs and EqHigh lows. Let's dive in. First of all, guys, I highly recommend you, before you watch this video or exactly after you watch this video, go and check the previous video about liquidity, because liquidity is the key for everything what you see on the chart. So liquidity is a money, in simple words. EqHigh highs, EqHigh lows is just some levels what we can just name it, like this one, EqHigh lows or EqHigh highs. So it's just like tool what we use to identify the level. Some people who trade a classic TA don't use it this terminology like EqHigh highs or EqHigh low. They use like support, trend line, and all of that stuff. And the main problem is for people who trade classic TA, right? So they use this level like support, this level like support, this level like support, and they think, because it's in the classic books, while we find some support bounce, it means this level strong. We retest it again, this level much stronger. The third touch is 100% support level, so we will never drop it lower, because we all the time see the support. It means the buyers are ready to buy at any drop. But guys, the problem is the more we test some theory level, this level become weaker, not stronger. And it's only the matter of time when we will drop or pump and sweep the liquidity. Hunt stop losses. Higher time frame, the more liquidity concentrated under this level. So EqHigh highs and EqHigh lows are liquidity pools where the highest concentration of stop orders is found. Typically, the EqHigh highs and EqHigh lows are the result of artificial liquidity engineering. So guys, I always repeat, everything what you see on the chart is just built and formed by algorithmic bots. Yes, you hear a lot of stuff about ICT concept, smart money concept, but guys, ICT just give the names of that levels or that tools, you know. The S&P 500 is traded by these bots during the last, I don't know how many years, right? They traded. So now the crypto only 15 years like exists, and I already explained to you, it's impossible to trade all of that coins every single day without a weekend on even 10-second time frames manually by hands of traders around the world. All these levels are designed to serve as motive for stop order rates in the future. So in simple terms, the price usually aims to clear liquidity above or below this level. The retailers who trade by box, they always think when we got some levels, it's like support. And the next level is resistance. But believe it or not, in most cases, sooner or later, we drop and sweep this liquidity pool. Because under here, somebody buying here, add stop losses here. We drop it down. He buying more or new order, stop loss here. 1%, 2%, 5%, no matter what. It's cross margin, isolated margin, spot, absolutely doesn't matter. Third time. So with this move, we're going higher, and while we drop, mostly people will open short, because in retail's mind, if we lost some level, it means we shift the trend. But that's also a mistake, because we just hunt liquidity, hunt stop losses, and their stop losses, it's a fool for going higher. So that's the deal. Or the second option, we can leave here EqHigh lows. In this case, it's when USDT trading pair, and going higher. But after the years in the next bear market, for example, after the new all-time high like this one, we can drop and hunt that liquidity, because everything what you see on the chart is just algorithmic bots. We'll leave the liquidity, and sooner or later we're gonna hunt this liquidity. To mark these levels, I use just a basic line, and I recommend you to create a template. So you can mark EqHigh highs, EqHigh lows. How to work with the lines, I already posted the video. 5% tiny stop loss will be more than enough to liquidate these guys. 5%, 6%. But it can be the big concentration of liquidity. It's not some one position of some one trader. No, it's just a tiny level. But there's millions. There's million liquidity, money. And it's more than enough to make a move like this one, grab all of that millions and put the price higher. This is example of EqHigh lows. It's a great example. Also, you have to understand the weekly time frame EqHigh lows, it's like a big magnet for the market makers in the future. So for example, if and when we leave the EqHigh lows like here on BTC. So here, we leave it. For retails, 28K, it was a strong support level, historical level. They found a million explanation why exactly 28, 30K. It's a crazy support level, which will never breaking out down because we never drop it below previous all-time high. It's Elon Musk level. He purchased BTC here. It's Michael Saylor level, blah, 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 all this stuff. And then we just, after it was made somewhere one, and just after the year, we just come back and sweep that EqHigh lows. That's a point, guys. And leave here the EqHigh highs. So after also the 3 years, come back and sweep that EqHigh highs, because a lot of people add stop losses here or add the limit orders to sell here because they need to out at the break even. Everything should be in complex. If we trade around the K level, a lot of people use the same FIB, understand the market, and they can add here the limit orders to sell. Limit orders to sell can be like also fuel for continuation and liquidation of that, guys. So we go to 4 hour time frame. Here we form at the top, another top, and we form just a local, let's go to 1 hour time frame, local EqHigh highs. So above these levels, someone stop losses, and something like here, around let's say 5%. Got it. What the market makers do the next? Why we always around some K level going like in a sideways? Because the market makers need to build liquidity, and we go in higher. Bam. We sweep it, this highs on 1 hour time frame. After that, when we sweep it, we see the reaction on 1 hour time frame. On 4 hour time frame, we form it another EqHigh highs. So that guy's liquidated, this guy's created. The people again open it short, add stop losses, and wait the correction. Bam. Again, liquidated, that stop losses, and almost touched till penny 2.61 level by FIB. And sooner or later, we go and liquidate that 12 hour time frame stop losses. So this is a way, guys, how the market makers hunt liquidity all the time. But you have to understand, if some token, for example, like Dent, formed some EqHigh highs on a weekly time frame, it's not 100%, so we will come back and sweep that highs. Depends of market capitalization, depends of how many tokens inflow into the market with the unlocks, with supply. So technically, we can sweep that highs, but everything should be in complex. When you see something like this one, most likely you can be sure if the token relevant still exists on the centralized exchanges, the people trade it, there's volume on this token. Yes, most likely after the 3-4 years, we will come back and sweep that highs, liquidity pool. The same story happened with XRP. So guys, I hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.